Welcome to the Performance Monitor for May 2017. My name's Barney Hawkins and I'm an Investment Director at True Potential. Like last month, we'll first review the markets and then look at some of the key themes. And then Chris Leyland, our Deputy Chief Investment Officer, will talk about the True Potential portfolios. For advisors looking for more in-depth information around the True Potential Wealth Strategy Fund range, we would suggest tuning into the weekly webinars. Through the webinars, you can interact directly with our fund manager partners and access their expertise and insight. So, onto the markets. And this month, there is a sense that investors have paused for reflection. In the UK, political campaigning is grabbing all the media headlines. The election result is widely expected to strengthen Theresa May's hand in dealing with Europe. But there is no doubt that the adoption of negotiating positions in the wake of Article 50 being triggered has shone a spotlight on our relationship with the EU and focused attention on life after Brexit in 2019. On the currency markets, the pound recovered strongly against the dollar, gaining 3% to stand at approximately 129, and this too has had a sobering effect on equity prices, so that over the month the FTSE 100 was down 1.3%. In Europe, political risk has receded with the election in France of the centrist candidate Emmanuel Macron as president. While time will tell how effective he is in introducing structural reforms to the French economy, his pro-European stance does, at least for the time being, put an end to speculation of France leaving the euro and any unravelling of the European Union. Aside from the French election, there's been a succession of positive economic indicators, with European economic growth in particular coming in ahead of expectations. Europe is an area where most of our fund managers have been increasing weightings, and this interest from investors, together with the improved economic outlook, helped the market rise 2.4% over the month, although the strength of the pound pared that back to a gain of just over 1% for a UK investor. In the United States, Donald Trump has found it harder to implement key campaign pledges than it was to make them, and this frustration has begun to weigh on investor sentiment. However, the economy continues to grow strongly, and indications from the Federal Reserve Board that a further 2 interest rate rises are penciled in for later this year underscore the Fed's confidence that economic growth will continue. Over the month, the S&P 500 index nudged up 1%, but a weaker dollar translated this gain to a fall of 2.2% for sterling investors. Away from equities, the bond markets were generally positive despite talk of higher interest rates and growing inflationary pressures. Geopolitical tensions rising between the US and Russia and the US and North Korea, which also sucks in China, has caused some gravitation towards safe assets. This flight to safety lifted UK gilts up 0.4%, with the UK corporate bond index also up by 0.25%.